This year has been by far the worst year ever in the history of the bond market. It's down over pretty much 21% year to date. As you could see in this beautiful chart, nothing even compares to what we have here in the blue in 2022. And many people in 2022, including myself and Michael Burry, if you remember, he had TBT calls, which meaning he was short TLT, which is a 20-year treasury. So he was short bonds. And I personally believe, looking at his latest tweet, that he may be actually going long bonds into 2023. Now, I know I'm going to get a lot of pushback on this, but I did a lot of videos on Michael Burry. I analyzed many of his stocks like GEO, Core Civic, and many of them were actually on point. Now, I'm going to explain what he really mentioned in this interesting article and what I believe bonds could potentially make a massive comeback in 2023. So again, I hope you enjoy this video. Now, before looking at the thread, we have to look at couple of things. Now, looking at TLT, which is a 20-year treasury ETF, it's at 2011 levels. There's a lot of capitulation within the bond market. Now, on the other hand, you had many people on YouTube, they've been saying to go long bonds, and then the bonds kept crashing. So they may continue crashing, but I believe it's closer to the end than in the beginning, in my opinion. And if you actually look at the MOVE index, which is kind of the VIX for bonds, it measures the volatility. The volatility is pretty much approaching the 2008 financial crisis type of level. Now, whenever something goes that high, something has to happen. Someone has to intervene to stop the yields from rising, as the government has a lot of debt and it's just unsustainable volatility for the treasuries. I'm not saying the same thing is going to happen like what happened in the UK, but it could be possible in the future. And this is what Michael Burry is talking about in this tweet. And he said, he's still saying the Fed will back off on QT in early 2023. And he referred to this article which I read. Now, this article is pretty interesting and it's talking about the MOVE index of the volatility of bonds. And it's saying that this is pretty much unsustainable. And eventually in the future, what the Fed might do, they might say if the bonds, for example, they get to a certain level, let's say 4.5 or 5% on the 2-year or the 10-year, they're gonna start buying some of them. Now, just because the Fed says that, it could potentially put a ceiling on bonds, causing yields to go down. Other than the treasuries doing buybacks, this is the main thing with the article. But the treasuries can also do some buybacks, which is Joseph Wang talked about. He used to be a trader at the Federal Reserve. They can potentially do that. But in my opinion, what they said in this article really makes sense. It kind of like what Biden said with oil, although it didn't work. But he said he's gonna buy around $65 or $67. Now that put pretty much a floor on the price of crude oil, even though Biden haven't bought anything yet. And this could potentially happen in 2023. But this is only one of the factors, in my opinion, why bonds could potentially have a pretty amazing run in 2023. And it's hard for me to say that, as I had TBT calls pretty much, at least in the middle of 2022. I got stopped out around August, and of course I missed much of the crash, but I did capture a lot of upside with the TBT calls, all right? Now, looking a little bit more at the treasury. Now, the 10-year is yielding pretty close to 4.2%. I believe the 5-year is pretty close to 4.5%. Now, the whole thing with bonds is we have to think, what could get investors to buy bonds? What is something that could go right for bonds in 2023? Well, it has to be the opposite of what went right in 2022. For example, in 2022, we had high inflation. It pushed yields to go up. We're having QT. We're not having QE. We're having Fed raise rates, which sometimes it puts some kind of a floor on the treasuries. And this is what we had in 2022. We had pretty much the market being resilient. We didn't have anything break. Now, I don't know about you, but if yields keep rising that much, and those treasuries, they keep pretty much going up on the yields, and inflation, do you believe it's really going to be higher in 2023 than 2022? In my opinion, I don't believe so. I think inflation is going to be lower in 2023. The question is how low. It could be 7%, 6%, 5%, but again, this is pushing closer and closer to the 10-year, which could potentially lead up to 5% in early 2023, or even 4.5%. So this is getting pretty close, and lower inflation is a positive catalyst for bonds. The second one is yields getting too high. If yields get too high, then investors would be buying. This is something that would push investors to potentially buy. Something else, which is the main bet that I believe is going to happen, is something breaking. If something really breaks in 2023 with all the tightening and everything we have, and in my opinion there's a very high probability of this actually happening, in my opinion at least, investors are going to go back to bonds and treasuries for safety. And I know I'm going to get a lot of pushback on that, but this is what I believe is going to happen, mainly because it happened before. Whenever something really bad happens and investors run for safety, I don't believe they're going to get safety in stocks, and they've been selling stocks. They're gonna, I believe, get safety in bonds and secure a pretty good yield between 4 to 5%, which is going to be amazing if we do have a lot of panic. And I know, again, I'm gonna get a lot of judgment, but if you remember, whenever the war started in Ukraine, yields were going up and then they sold off because investors went to bonds and they went to gold for safety, and then they sold them back off again whenever the whole thing unfolded. But this is the behavior of investors, and I believe no matter what inflation is going to be in 2023, if we do have something break, we have something pretty bad. You keep saying those articles about investors holding more cash than any point in the last 21 years, and people talk about how that's bullish for stocks. It's like only institution can only invest in stocks. They can't be buying bonds or treasuries or any of those other instruments. I believe if we do have something breaks, investors are not going to be going in stocks. In my opinion, bonds will get bid up pretty nicely, especially if the yields keep going up. I know this video is going to get a lot of pushback, but this was, again, my opinion and why I believe Michael Burry could potentially be going long bonds in 2023 after being short bonds in 2022. And if any one of you are actually interested in replicating a pretty close trade to what I talked about today and to what Michael Burry might do, but again, we're not going to find out until, I believe, Q1 of 2023 about what he does. But there are a couple of ETFs that can actually do that. The first one is more short duration, which is SHY. You have TLT, which is more on longer duration. And you have TMF, which is like a call option of a 3x type of leverage on the TLT ETF. And I haven't decided 100% yet. And I believe capitulation is getting closer and closer to be finally in bonds. I might be going TLT calls going into 2023 if I really believe that inflation is going to be lower, if I believe that the Fed could somewhat intervene in 2023, and if I believe something could be close to breaking, and that would send investors running to bonds for safety, especially if the yield is attractive. In my opinion, bonds have a decent chance of actually outperforming in 2023 after they underperformed massively in 2022. Again, this is not a certain bet. This is just a probability, in my opinion. It's pretty contrarian again, but this is how it is. I mean, you can't just be buying things when everyone is excited, and you can't be shorting them when everyone is too bearish, in my opinion. So again, this is my video for today. No financial advice, of course. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.